Guys, Marty Boots here. Today is the 18th of September 2019, and I want to talk to you today about the total altcoin market cap, excluding Bitcoin. And I want to talk about we had an extremely powerful bounce in the last day and a half or so in altcoins, and you know everybody wants to know, can they dream? Can they believe this is real? Can they? What is the chances of this being real and having gains like back in 2017 when altcoins go absolutely parabolic and make life-changing money? Now, people have stopped believing that that is even possible. And, because of the bear market, because of the consolidation, because of the long-term, since it's so long ago since it happened now, people want to believe that again, but they're scared to believe it. I want to talk today about the potential of why it could be actually just about to happen. Now, this is the total market cap excluding Bitcoin, so that is important to note. So Bitcoin does not come into account here, which is good. I want to talk about, well, first off, I'll just show you very briefly this trend line. This trend line here, it's an upward trend line. Now, price is holding very well on it. You can see, well, I like to draw my trend lines where they have the most touches possible. So I just think it's important to note where the touches are. There's a touch there. There's another touch there. Touch there. Obviously, a touch here. Back test. Comes back down. Touches there. It comes back up. Touches there. There. And now we're up here. So it's an important trend line. Instead of, some people will just do that. That's only two touches. One down here and one here. That is not the way I like to do my trend lines. I like to do them as the most possible touches that fits the chart. So I think that's a very important trend line right now, just to mention that. Now, the other important thing I want to talk about here is the volume. Look at this volume, guys. This volume is, it's astronomical compared to all this volume back down here. And yes, people talk about the wash trading and exchanges manipulating the volume and stuff. Yeah, so be it. Yeah, of course, we know all that happens. But this is an extreme amount of volume. And even today and yesterday, you can see the green volume coming back into the market. Backed and all the other institutions are starting to come into this market. Even Backed is coming in now in 2 weeks' time or less. There is going to be a lot more institutions and banks to follow once they get the word out and get the ball rolling, and they see that the crypto market is starting to get a little bit more safe, with more regulation and better exchanges and different things. More people will follow and the money will follow. The public is slightly starting to come back into things after being burnt really badly in the bear market. The public are coming around a little bit back into crypto as a whole. So they're all very important long-term aspects. Now, but what I want to show you here, I think is very, very important. Now, this, no, not that yet. This chart here. So this on the left is the total market cap weekly chart, and on the right is silver. Now, what I want to show you here, the bear market dropped 91%. Now, that does not really matter, but it's a bear market, and it's, it was a serious bear market. This was a serious bear market in the financial crisis of silver, and it dropped 60%. As far as silver and commodities goes, that is huge, guys. That's monstrous. So don't think it's not as bad as the crypto market cap, as it is. Lots of smaller silver companies and stuff went bankrupt back here. They couldn't make it through the bear market, so it's it's extreme. I remember trading this back then. Now, what I want to show you guys, and I think this is extremely important. Now, what I first want to tell you and describe and make sure you understand this before we go ahead with this, it's something very, very important. Now, you look at silver here. Silver is above the weekly 200 moving average. Now, if you are above the weekly 200 moving average, you can be considered in a long-term bull market, regardless if you've had a 60% drop. That is still in a bull market. That is a retrace, so to speak. You know, look at the retrace right into 78%, for example. It's just a retrace in a long-term bull market. That might be considered a bear market at that present point in time. But when you zoom out on the chart, it's only a pullback. It's only a minuscule pullback in the long-term trend. Now look here at the total altcoin crypto market. This is above the weekly 200 moving average. This can also be considered in a long-term bull market. Now you can see here very well. I'll just show you one other thing before I continue. Look at the S&P 500. Look at the financial crisis. Look at the .com. These are only minuscule crashes, minuscule pullbacks, in a long-term bull market above the 200 weekly moving average, monthly moving average, This is a monthly chart, but I want to drill home to the fact that when you're above the 200 moving average on a longer term basis, it's in a bull market, regardless if you have a 60% pullback. Is that 64%? From memory, 57%. So regardless of this crash that almost changed the world, it did change the world, This did change the world, but it almost crashed the total financial system. Most banks, countries, almost everything went bankrupt at that point in time. A lot of Europe, total countries, total banks, institutions, you name it, everything went bankrupt then, almost went bankrupt then. But if you actually zoom out and understand that this is above a monthly 200 moving average, as soon as price gets back above that, this was a fantastic buying opportunity, and as soon as price got back above that, look what happened. It's unbelievable, and it's paramount to understand, guys, and understanding direction and trend of charts. So with understanding that in the long-term scheme of things, we are above the weekly 200 moving average here on the altcoin market cap. Now, what I want to show you here, this gets very interesting here, guys. Very, very, very interesting. Look at this. Silver fell below the 200 moving average in a bear market. In a bear market, the crypto cap fell in below the 200 moving average. What happened? It bounced into the 100 moving average. Flawless, guys. This is exactly what you want to see. Bounced into the 100 moving average here on silver also. What happened on silver? It pulled back. I'll delete this now. It pulled back into the 200 moving average. It pulled back into I'll show you that better so you can see it. What happened here? We pulled back into the 200 moving average. Very important, guys. Very, very important. It's a retest. After a break higher, it's a retest. It becomes a support level. Let me just delete this. Sorry, guys. It becomes a support level. This 200 moving average becomes a support level. And you can also see here it's support. In here it's support. In here it is support. Now, I've not even done this on silver. This is totally off the cuff, guys. But look at this. It is support. We break back above this. It's using this as support. Used as support. I mean, it was resistance back then, but now what happened? Price went back into a bull market. Price bounced. It never retested the 200 again. It did retest it there very briefly, but it did give it a second retest actually. But this was the lowest point that it got to, and then it made a higher high and came back down and retested again. Now, if that is the case, and something similar happens here on the total altcoin market cap, we can bounce higher. These altcoins will bounce 300 and 400%. Maybe we come back and test it as this trends higher, and then then it moves higher. Look what happened. Silver went parabolic because the long-term trend of the 200 moving average is up. Look at this, guys. The trend of this moving average is up. So that enabled price to remain bullish and trend higher. So that is potentially what can happen here on the altcoin market cap. And let me show you something, guys. Let me show you something very interesting. Now, what happened here on silver, basically, you can see here, it was a breakout point, and it formed a giant, almost cup and handle. It formed a giant cup and handle, and then it exploded higher. So you could, I'm not saying it's the best cup and handle in the world, but you can see the cup and handle here. Okay, now look at the total market cap. What is this doing? It's actually forming a rounding bottom here. And what if something similar happens? Sorry guys, I completely pressed my mouse button. But you can see what I'm trying to tell you there. What if this 200 moving average holds here? This 200 moving average holds and price starts to grind higher. Price can retest the top. And what happens when you retest the top? What do? You take a depth of this pattern right down to here, and you measure it from the breakout point. What does that give you? That gives you a $1 trillion market cap for the total altcoins in the market, excluding Bitcoin. That is excluding Bitcoin, guys. We are above the 200 weekly moving average, and that is a possibility, guys. So that is telling us right now that as long as you can buy as many, this is not financial advice, guys, but this chart is saying that potentially you can buy as many altcoins as you can get your hands on right now, as long as this holds. You don't want to see this 200 moving average broke on a weekly chart. So basically on altcoins, that is between 10 and 20% risk here right now for potentially the buying opportunity of your lifetime. I've made videos where I've said Ether and Litecoin is going down to potentially new lows, but as new evidence presents itself, you have to consider it. And we have bounced off the long-term moving average here on the total market cap. And let me explain one thing. It is not a coincidence, guys, that these altcoins are bouncing at 10, 20, 30, 40% right now. Why are they bouncing? Because we just bounced off the 200 moving average on the altcoin chart, on the altcoin total market cap. This is the reason the whole market is bouncing. It's not a coincidence. It's very important. Why do you think silver bounced right here? It is respected, guys. The moving averages are respected by long-term institutions or institutions and banks for the long-term trend. They are respected. Now I can show you back here. It's no coincidence, guys, that these moving averages were respected. Look at that. It's a perfect touch of the 200 moving average. It's perfect. It's no coincidence this retest. That was a financial crisis. It was an overshoot. Price bounced, came back in. It's no coincidence that this was bought up. The billions and billions and trillions of dollars bought this market up right here at the 200 moving average. It's no coincidence here that this retest was bought on a higher low at the 200 EMA. That's a 200 EMA. It's no coincidence, guys. Look at this 50 moving average. It is no coincidence. This took billions and trillions of dollars to buy this market up exactly from the 50 monthly moving average. These institutions and banks use these long-term moving averages to position themselves in the trend. This is how they make millions. Crypto Twitter was saying it's going to zero. The banks and institutions we're buying off this long-term moving average. Okay guys, here we have on the left hand side we have the S&P 500 1 month chart of the financial crisis, and on the right hand side we have the 1 week chart of the total market cap excluding BTC. What I want to show you here, it's also very interesting. Again, we had that drop below the moving average, below the 200 moving average. Then when price bounced, what happened? It bounced right into the 100. Then we dropped, retested the 200 moving average, and then we took off higher. Now what do we have here on the total market cap excluding Bitcoin? We had the bear market. We bounced into the 100 moving average. We dropped, we retested. See the retest? We retested the 200 moving average, and now potentially moving higher. Now, I talked on this with silver, I think, but this is a very good example. This is another very, very good example. When the long-term trend, let me show you, when the long-term trend is higher, what happens? The price is going to go to the least, the least resistance point. So the least resistance point, if the long-term trend is higher, is to grind higher to the upside. So the crypto market cap, it's only new. So in theory, long term, it has to grow. It's not going to get too much smaller. I mean, what is this now? 79 billion. So in theory, like, it should be growing. If you actually think about it, it should be growing. This moving average is telling us it should be growing and it should go higher, just like the S&P 500 here. You can see in the retest, and then we went higher. So I just thought I would add this to the analysis. That's all I've got for you guys on the video. Potentially it could be life-changing gains here if this holds. This market could start to go into a parabolic state. That will take time for the trend to develop. As you can see, the trend on silver, for example, there was choppy action, but it was choppy, and it was almost a 1 year later. It was almost 1 year later there before the parabolic action. So even though it might not happen straight away, it might take a year, but this, you can position yourself for long-term buys if this is going to hold. And then a year down the line, you'll be positioned very well for long-term gains. So, okay guys, I'll leave it at that. The video was around on a bit. If you like the content of the video, guys, please give it a thumbs up as it helps the channel, and subscribe to the channel for future content. If you'd like to join us in our trading room, we're in there every single day, and as you can see, we're in here trying to make life-changing money in this market. And if you'd like to join us for the 3-day free trial, go to the website in the description below and click on that, and we'll get you signed up for the 3-day free trial. Thanks for watching. Have a good day.